All right, if you've ever worked in the service industry, you know this exact feeling. You get your W-2 and you see this number in box 8 for allocated tips that just makes your stomach drop. It's money you never saw, but suddenly it feels like you're on the hook for it. Well, today we're going to break down exactly how you can fight back and make sure you only pay tax on the money that actually made it into your pocket. Okay, so tax season rolls around. You get your W-2, you're scanning through it, everything looks normal, and then bam, your eyes lock on box 8, allocated tips. And there's a number in there, maybe a big number, and you know for a fact it doesn't match the cash you took home. Your first thought is probably confusion, and that's usually followed pretty quickly by a little bit of panic. So what in the world is this mystery number? In a nutshell, it's a placeholder amount that your employer is required by law to report. But here's the most important thing to hear right now. It is not necessarily income you actually earned. So don't panic. The good news is there's a totally legit IRS-approved way to correct this on your tax return. You just have to know the rules of the game. To figure out how to fix this, you got to understand where this number even comes from. It all traces back to one specific IRS rule that was designed to close the tax gap on tips that go unreported. And this is absolutely critical. This is not a wage. Your employer hasn't taken a single dime of tax out for this amount. No income tax, no Social Security, no nothing. You can think of it like a little flag your employer sends to the IRS that just says, hey, just a heads up, based on our total sales, we think there might be some unreported tips floating around here. So how does your boss even get this number? Well, it's just a simple mechanical process for them. First, they look at the big picture. Did all the employees combined report tips that were less than 8% of the restaurant's total sales? If the answer is yes, then they have to figure out the difference. That's the shortfall. And then they have to split up that shortfall among the tipped employees, usually based on how many hours you worked. And boom, that's how that magic number lands in box 8. Okay, so now we know what it is, but why do we care so much? Why is it so important to handle this the right way? Because that number in box 8, it's a giant, blinking, neon red flag for the IRS. If you just ignore it, you're basically walking right into an audit trap. This is the whole problem right here. The IRS computer sees a big number in box 8, and it sees the smaller number of tips you actually reported. And to the computer, that's a huge discrepancy. It screams, audit me. But you know your reality. You know what you actually took home. The entire game is about proving your reality is the right one. And this is where it gets really serious. You have to understand how the IRS and the tax courts see this. In their eyes, whatever number the IRS comes up with, it's presumed to be correct. The entire legal burden of proof is on you. You, the taxpayer, have to prove them wrong. Just saying, nope, didn't earn that, is not going to cut it. So if the whole burden is on you, how in the world do you fight back? How do you win? Well, there is one way, and it's the one thing you have 100% control over: keeping perfect records. This is it. This is your shield. It's your armor. It is your entire defense. A tip log that is detailed, credible, and this is the most important word: contemporaneous. That means you wrote it down the day you earned it, not trying to remember 6 months later from a napkin. Seriously, this one document is the most powerful weapon you have. And look, this isn't just my opinion. The tax courts have proven this over and over. It's a tale of two outcomes. In one case, a server had a detailed daily log, she won. In another case, a taxpayer's records were a mess, he lost. It is really that black and white. Good records will tip the scales completely in your favor. Okay, so what makes a record credible in the eyes of the IRS? Well, first, it has to be done daily. They call that contemporaneous. It needs to include everything: the cash tips, the credit card tips you got paid out, even non-cash stuff, like if you got concert tickets. And here's the kicker. It has to more or less line up with your other financial data, like your bank deposits. They'll cross-reference everything to see if your story checks out. All right, we've talked about the problem, the audit trap, and your defense. Now let's get to the most important part. What do you actually do when you sit down with your taxes? This is the action plan. First things first, let's get one major myth out of the way. You can't just go to your employer and ask for a corrected W-2. They are legally required to put that number there. The fix does not happen at your job. The fix happens when you file your tax return. Okay, here's your step-by-step plan. Step 1, pull out your W-2 and your daily tip log and put them side by side. Step 2, On your tax return, you report only the amount of tip income that you actually received, the amount you can prove with your records. That's it. Now, let's say your log shows you actually made a bit more than you reported to your boss. That's what Form 4137 is for. You use it to pay the Social Security and Medicare tax on that extra bit. But, and listen closely, this is the key. If your log proves that the allocated amount in Box 8 is too high, you simply ignore the extra amount. You do not report it as income. Why? Because you have the proof you never got it. You know, getting this right isn't just about this year's tax bill. For anyone who's getting close to retirement or already there, getting this wrong can have absolutely devastating long-term financial consequences. Yeah, people in the know call it the double torpedo, and for good reason. When you accidentally report income you never even got, you're making your income look way higher on paper than it really is. And for retirees, this can set off two separate, very expensive problems. So here's how this 1-2 punch works. First, that artificially high income can suddenly make a huge chunk of your Social Security benefits taxable. We're talking up to 85% of them. Second, that same fake income can push you over a cliff into a higher bracket for your Medicare premiums. These are called IRMAA surcharges, and they can literally cost you hundreds, if not thousands of dollars more every single year. So why does all this matter so much? Because you could end up paying way more in taxes on your Social Security and way higher premiums for your Medicare, all because of phantom money, income you never actually received. It's a massive and totally avoidable financial hit. And really, all of this comes back to that one simple thing, that daily tip log. It is not just some dusty notebook. It is your financial shield. It's the only thing that protects you from an audit, from paying taxes on money you never saw, and from those awful long-term consequences. So the last question I have for you is this: is your shield strong enough to do the job?